Welcome to Trading Lounge and the European Indices. I'd like to start with the S&P 500, and it's the 10th of May. So we are looking at a wave 4 low. The problem with wave 4s is that they can get very complicated. So it's possible that this wave 4 can get more complicated. So we'll need to talk about that a little bit. One of the things here is that we had a couple of targets coming to the downside here. One of them was covering this little gap over here. So we've met that right here now. So that's good. And we can also count this down here as an A and a B and a C wave to this point. We could also put, in terms of counting, we could also put wave A over here for an A and then a small A, B and C over here. The trouble with the gap here makes it a little bit difficult, but either way is fine at this stage. So the 38.2% retracement level, however, is down further through here. Okay, so it could move down further from this point. The current bounce that we've got off this gap low here appears to be in 5 waves here. So it's possible that we can also move up from this area here as well. And the reason, of course, that I'm showing this is because the S&P is because it will probably help drag the other markets around. So we're in a reasonable downtrend here, and calling a low in can be a little bit dangerous without a lot of evidence. The only evidence that I have is either this count coming down through here fits quite nicely as an A and a B and a C wave here, and the other point here is looking at an impulse wave to the upside here. So we could actually go long above this current high here if that is breached, but the trend is still down, so we can't stick our head in the sand and let that pass. So we do need a move to the upside. The other point too is that if this is an impulse wave here, which it certainly looks like, then we'll have a corrective pattern pulling back and then a move up. But even when we have a move up through here, that would still leave us with 1, 2 and 3 here, which can be an A and a B and a C wave here. So we would also need to see 5 waves up to this point. One way of also handling this as well is taking this low here. The 61.8% mark is here. So if we get 3 waves to the 61.8% mark, well, then it can be corrective at that point. So that's where we need to be mindful. But if we get 5 waves up to the 61.8% mark, then we're going to pull back and go higher. So if we get it, we'll just need to monitor this. If we do break a new high here, then we'll also be looking to see if we get 5 waves or 3 waves to the upside at that stage. So there's a lot of work to do at this stage here. In terms of the downside here, we could also put as another count here, we could also put this wave B over here. And then that would leave us this as wave 1 down and wave 2 here, and then 5 waves for wave 3 here, and then wave 4 here. So if wave 4 is going to be there, and we'll look at this in a moment on another chart, but wave 4 here, there's already at its 38.2% retracement level there. So if I go to this chart here, this is what I'm meaning here, is that if we looked at this as the A wave to here, the B wave to here, then 1 and 2 here, and then 5 waves down for the 3rd wave and the 4th wave here, which is already at the 38.2% retracement level around here. So it could drop lower from that point there to finish this off here at the 22,800 area through here. So I don't know yet, but if we make a new high above here, then we can rule out this particular count here. So it's really about monitoring this situation, what's happening here. So on a tick chart here, picking this low up here, all the way down through here. Like I mentioned, this does appear to be impulsive, this move here, but what we need here to see is, this is group 2 here, we need 2872 to become the support. At the moment it's the resistance. If it becomes support, then we can turn bullish from that point, but otherwise it's bearish from that point. Okay, so that's the line in the sand. So taking that on board with the European markets could be helpful. So understanding understanding the 28.72 as being support would be bullish. So coming into the euro market here, we can look at this in terms of 1 and 2 here, and 1 and 2 and 3 and 4 here, and going up for 5. This count is in line with the Asian count pretty much, so with the Australian count. So still a wave 4. This wave 4 here, if we take this wave 2 here and look at this wave 4 here, that brings us into the 38.2% retracement level at the 12,000 there. So we're kind of in a good space here at the moment. So we could push up from here. That's the point. So on the 4-hour chart, just using in there, we know that this is the 38.2% retracement level. We would expect some sort of support at the 12,000 anyway, here, and it's a large number and so on. But what we need to see is we need to see a push up from that point, okay? And that can trigger the long trades from here. So once again, as I just mentioned with the S&P 500, this little move here appears to be impulsive in 5 waves. So if the 12,100 becomes the support, or this top gets breached here, then we can go long from that point and keep the stop. When you're putting the stop in between here and here, you have to be mindful of the 61.8%, so round it off to 62. So if you bring that down under the 62% area there for the stop, this is much the same for the French market as well. Don't worry about the counting here too much, but this little move being impulsive here, if that's breached here, then we can go long from here. But it will also take us out of our short trades, because we've been short from here and we've been taking profit on the way down. So this would also be the stop in here as well. So we can just reverse the position here. I don't know if the wave 4 is going to get bigger and uglier as terms of an A wave and a B wave and a C wave to the downside. That could also happen for the S&P 500 too. So let's just go back to that for a moment and look on the maybe the 4-hour chart here. So realistically here, you know, wave 4s can get complicated, so we just need to be really careful. So we could also end up in a situation like this here as well. So an A wave, a B wave, and a C wave for wave 4, coming down more to the 38.2% retracement level. That's if it moves up here. So the 2900 will be a really important space here for the S&P here. So it can be counted. It's just the way that wave 4s are. They're just a bit tricky until they mature and we can go, oh, that's what it was, you know. But it's important to look at everything first and then start narrowing things down. So that's what I'm doing here. The UK market, the FTSE, so we'd been counting an impulse wave to the downside, so I was expecting support at 72, so we're kind of getting that now. We can count this down here. So once again here too, if this high here is breached, you can go long from this point here. It's high risk because it's in turn of the trend, but also the money's in the turn as well. So as I mentioned, it does appear that we've got an impulse wave moving to the upside here, so we can take a new high here. If you know the TradingLounge's work, then this would be like a switch pattern coming into here. Yeah, let's see how we go from this, and also to the Italian market. So with Italy, we've been short in a couple of places up here, 2 up here. We've taken part profit down here, and also to here as well. We looked at taking more profit off the table here. Once again, here, if the other markets are going to push up, then this market will push up as well. So, but before you go and buy this one here, you'll need 21,000 as the support here. So yeah, just be mindful of that. So it's tricky business trading against the trend, so perhaps just use smaller positions until we can get a grip on the pattern that's going to play out here. I'm going to leave the stop where the entry is here, so it's just really a reverse trade from this point here. There's not much left in this trade. as such, because we've taken profit here and also down here as well. So you may even be out of the trade. Anyway, support at 21 will take us to the upside. Alrighty, thanks for tuning in. Cheers.